From the University of Westminster, this is The Week Ahead with Dave Coker.
All right, guys, welcome. This is The Week Ahead. It's Sunday, January 10th, 2021. My name is Dave Coker. Let's see what's happening in the markets over the next week. So as usual, we start out with 5 key events that you have to pay attention to. U.S. politics. Now, we all know what happened in the Capitol last week, and now people are screaming for Mr. Trump's head. There's talk of impeachment too, which would be really amazing. We've never had president impeached twice. We'll have to see if that comes to fruition. There's also talk that Mr. Pence, Vice President Pence, I should say, is going to invoke the 25th Amendment, or may choose to invoke the 25th Amendment, which allows for the withdrawal, or the removal, I should say, of a sitting U.S. president who's been deemed incapable of carrying out his duties, or her duties, perhaps. Next up, we've got stimulus hopes for 2021. It's unlikely to get done before Mr. Trump leaves office. However, the ground does look pretty clear for Mr. Biden to come in, and Pelosi, who's the Speaker of the House of Representatives, has said that it'll be their number one priority to get people $2,000. I've got mixed feelings on that. They're sort of blasting it out to everybody, and as you guys know, I'm American. Yep, I've been getting the money. I don't need the money. I'll take the money. I invested in the markets, of course, into dividend-paying stocks, but it's going to be interesting to see how that pans out, because the more extreme people want, or the people with more extreme views want to make this $2,000 payment a regular monthly event. Other people have said it should be backdated to the start of the corona crash, as I call it, the COVID crisis, as other people calls it. Pay attention to it, because it's going to impact upon the U.S. budget. It's going to impact upon the dollar. It's going to impact upon fixed income, treasuries, and of course, it's going to impact upon the stock markets. We've got a lot of economic data coming out this week, and Fed speakers. We'll look at that when we get into the detailed day-by-day stuff. Q4 earnings. Season's kick off. The banks are first up. We'll take a look at that a little bit later. And vaccines. Yeah, that's the big operative phrase, trying to get everybody vaccinated. The U.S. is off to an extremely slow start. Not that the U.K. is much better. I think we've done 2 million people. It seems that they're doing about 200,000 a day here. Don't really have good data on what's going on in the States. It's too fragmented. But Mr. Biden has committed to delivering 100 million doses in his first 100 days in office. So that tells you that they're going to be focused, his attentions rather, his administration's attentions will be focused on vaccine going forward and trying to build up this almost herd immunity, because when everybody's vaccinated, or a significant percentage, then the virus, the COVID virus, can't really spread. All right, the S&P 100 over the past year, my gosh, look at this beautiful picture. You can see the big tech companies doing well: Microsoft, Apple, Google, Amazon, Tesla. My gosh, look at that, 814% in 1 year. It's a garbage stock, but it's interesting to see the performance. I wouldn't go near it myself, because I only invest for dividends. It doesn't pay a dividend, and that capital gain is not guaranteed. It could evaporate tomorrow. We have no idea. You can see over here on the right-hand side, energy's been a loser. Down at the bottom, you can see aerospace and defense, been losers over the past year. And then on the lower left-hand quadrant, banks haven't been doing that well over the past year. So interesting performance when you look at the S&P 500. We'll take a look at this over the next few weeks. We'll get a look at each one of these different views, I should say, and we'll see exactly how it's been doing. It's not been doing too well over the past week. Regardless, where is the smart money? Here's an interesting one. Now, I didn't make this. This was off FinTwit. And if you're not on FinTwit, I would advise you get on it. Twitter itself is a lot of fun to read. I don't participate. I do read a great deal more on FinTwit. And we can see here, guys, this is percentage returns for various asset classes. You can see, starting on the left-hand side, we had gold, about 400% back in the late 70s, early 80s. In the middle there, we got China, up about 450% before it cratered down there in 2009. And here we go, guys. Bitcoin, what a ride it's been. As a disclaimer, I'm a long-term holder. And if there is a crash coming up in Bitcoin, you can blame it on me, because last Friday, I started to sell. Just nibbling a little bit, but I've always said if it got up to 34,000, I'd start to lighten up my position. And I woke up one morning, it was traded at 35. I went to lunch, came back and looked, and it was trading at 40,000. It's really amazing how quickly it's gone up. Well, we thought that once we got institutional investors into Bitcoin, starting to hold Bitcoin, we'd see the volatility reduce. It doesn't seem to be that way, guys. Here, what we've got is we've got a percentage drop off the high, and we're only down about 1% on the right-hand side, but you can see some of these drops have been epic. My gosh, we're talking well over 70%. That was quite a ride, going from the big spike that we had in 2017, late 2017, early 2018, all the way down to 2019 when it dropped from peak to trough, down some 75%. Oh, and I'll just mention, guys, I should. My habit with Bitcoin, it was a habit. It's no longer a habit. But for years, I bought Bitcoin every Friday night, and I employed something called dollar cost averaging, which basically meant I spent the same amount of money every Friday night on Bitcoin. Now, for me, there was nothing magical except Friday nights, about Friday nights, except that I had some free time. I didn't have to worry about the next day. So I would, eat dinner, have some wine, and go buy some Bitcoin. And then I stopped towards the end of 2019, primarily because the position was getting relatively large in terms of how much money I had put in. And we didn't know where it was going to go. We still don't, although my personal view is that it's going to be much, much higher in the future. And I'm only selling now basically to balance out my portfolio overall of all the assets that I'm holding. But you can see the attraction of institutional investors into this asset class, and we do know some of the pension funds, I should say, and insurance companies in the States are holding Bitcoin now. It hasn't really mitigated the volatility. And guys, it's not just cryptocurrencies where we see this bubble building up. Here I've got the spread of Italian 10-years compared to German 10-year boons. And basically what we're doing is we're looking at the increased reward, the spread in yields, the delta in yields that investors will demand to hold Italian 10-year debt. And my gosh, it's absurdly low at this point in terms of basis points, down to about 105 basis points. It's really amazing that it's actually that low. It's the most amazing thing that when you think about the economic condition of Germany and comparing it to the economic condition of Italy, why are people paying for this stuff? Well, there's an awful lot of liquidity sloshing around in the system right now, and that's all you need to know. That's exactly what's going on. All right, starting with the weekly details. So on Monday, January 11th, and remember, when we take a look at this, what we're doing is we're looking at 3, maybe 4 different events. Of course, in my calendar, some of these days there's 45 or 50 things that I want to watch. I'm not going to mention all of them to you guys. This is just the highlights. So we've got the Conference Board Employment Trend Index at 1000 hours on Monday for December. Previous was 98.81. Forecast, we don't have anything there, so we're not totally sure. At 11:30 hours, we got 3-month and 6-month T-bill auctions. Look at this, guys. The previous was 9 basis points, literally. Totally flat. And it's absolutely ridiculous. You're giving your money up, surrendering liquidity to the U.S. government for 3 or 6 months, and you're getting essentially no reward. I do call it return-free risk. You're not getting a reward, but you are taking risk for holding these assets. Maybe not so much over a 3 and 6 month time period, but spare a thought for the folks that are piling into 30-year bonds or even 10-year notes. At 1200 hours, FOMC member Bostic is speaking. Now remember, he's FOMC is Fed Open Markets Committee. He's a voting member. And we do pay attention to what these members say so we can get a good feeling for what the mindset of the FOMC is, because that's the board, that's the organization, I should say, the committee that actually sets interest rates, increases them, lets them stay the same, or decreases them. Oh, my animation's horrible. Sorry about that. On Tuesday, January 12th, at 0600 hours, we got the NFIB Small Business Optimism Index. It's an index that's constructed from 10 different indicators, and they average them together. Prior was 101.4. We don't have a forecast. We'll pay attention to it. We do know that optimism among small business owners has been falling. At 1000 hours, we got the JOLTS, the Job Opening Labor Turnover Survey, job openings report for November. Prior was 6.652 million. We don't have a forecast, but do pay attention to that. At 1300 hours, we got 10-year note auction. The prior was 0.951, far less than 1%. We're likely to see some little uptick there. And what I've got down here at the bottom is I've got the US 10-year Going back a year, looking at daily, and you can see they've been drifting up relatively slowly since roughly August, I believe it is. So the interest rates on the 10-year note have been drifting up. And this is important, guys, because the 10-year is tied to all sorts of consumer debt in the United States. And also it's a good benchmark for government borrowing costs. On Wednesday, oh, my animation again. Oh, horrible. On Wednesday, January 13th at 0830 hours, we have the Consumer Price Index month-to-month for December. Prior was 0.2%, forecast to come in at 0.4%. It's still very, very low by historical standards, but actually if it does come in with a 100% increase essentially from 0.2% up to 0.4, that will be telling, and if that trend continues, where we see it doubling essentially, we might have a real inflation problem at some point. At 0830 hours, we got CPI year on year. Prior was 1.2, forecast coming in at 1.3. 1030 hours, crude oil inventories. Prior, we saw basically an 8 million barrel drawdown. We're forecast to have a 2.13 million barrel drawdown. And oil prices have been depressed for some time now. People, given the medical situations around the globe, people just aren't consuming oil, just aren't driving that much. At 1400 hours, we got the federal budget balance for December. Prior was 145 billion shortfall. We're forecast to come in at a $200 billion shortfall. And guys, this is significant because when the federal government when they run these deficits, they borrow to actually pay. And we'll have to see what happens here. It's going to have an impact on interest rates because people will not be lending money to the United States forever. Oh, there we go. All right, Thursday, January 14th at 030 hours, we got initial jobless claims. Prior 787, forecast to come in at 780,000. This is over a 1 week period, and you can see initial jobless claims refers to the number of people that are making their first claim for unemployment. So it's exceptionally high number. We do tend to look at the jobless claims, the 4 week average. That's being reported at 0830 hours. It smooths it out. It gives us a better idea than of what's going on than the regular weekly number, although we do look at both. And we can see the prior number was 818.75 thousand people unemployed over this 4 week period, making a claim for unemployment. At 1230 hours, Federal Reserve Chairman Jerome Powell speaking. Friday, January 15th, 0830 hours. Core retail sales month-on-month for December. Prior was a 0.9% contraction, forecast to come in at a 0.1% contraction. People just don't have the money there in the States. They're just not spending. They're buying essentials if they buy anything at all. And by that, we mean food, maybe some clothing, but they just don't have money to splash out on some of the nice little toys that they used to spend money on. And I shouldn't generalize. Many people, because we do know that many people are actually doing pretty well, and savings rates, as we looked at a few weeks ago, savings rates in America are really, really high right now. At 0830 hours, we got the Producer Price Index month-on-month for December. Prior was a 0.1% increase, forecast to come in at 0.3. Seeing a little bit of inflation on the producer side. These are input prices. Same thing at 0830 hours, we have the year-on-year number. Prior was a 4.1% increase. We don't have a good idea on the forecast. At 1000 hours, Michigan consumer sentiment for January. This is nationwide, but it's done by Michigan University. And prior came in at 80.7. Forecast coming in at 80.0. Yes, the consumer's losing confidence, and this impacts there's a cycle here with retail sales. When people are losing confidence and they don't think the economy is going to get much better, even if they got the money, they don't spend the money because they're not sure how long they'll have the money for. Perhaps they're working and they do have savings. They're just not going to spend money like they would if the economy was doing really well because they're not totally sure how long they're going to have the money for. So it's very important to get consumers upbeat, optimistic, and willing to splash out. It's a tough job for Mr. Biden. We'll see how he handles it. All right, guys. Whoops, what happened here? There we go. Sorry about that. I don't know what happened there. All right, guys, that's it for the week ahead. And once again, my name's Dave Coker. Now, there's absolutely no reason why you can't go out there and make some money. Once again, we do see the markets tending to bounce. They bounced last week on news of Mr. Mr. Trump sort of getting himself in some trouble there, and it looks like a clean run for Mr. Biden. The vote was certified, and he's definitely going to be sworn in on January 20th. So the markets get a little optimistic. So there's no reason why you can't make money. Remember, you want to try to avoid trading. Try to invest. I only invest in I only invest in assets, stocks in this case, that pay dividends. And you start out slow, but that is the only surefire way to get rich. Trading, yeah, no, not for me. And it's not for most people. We know there's very few people who can actually make a living at trading. You got to try to invest to get ahead. Thanks for your time, guys. Have an awesome week. Take care.